Good morning and welcome to SnapTech IT's monthly webinar for March 2024. My name is Ted Holsey. I'm Chief Revenue Officer for SnapTech IT and your host for today's event. Thanks for joining in for the live session. This webinar will be recorded and circulated to all registrants. You can always visit us on our YouTube channel for all of our content on demand. The topic for today is controlling your future, cyber insurance essentials for business owners. Now let me introduce our guest speaker. Joseph Brunsman is an avid truth seeker, sought-after keynote speaker, and best-selling author. Joe has published 2 books and numerous articles covering risk management and cyber liability insurance. He's a graduate of the U.S. Naval Academy in Annapolis, Maryland, where he obtained a degree in systems engineering with a focus on robotics systems interoperability. Joe is the founder and president of the Brunsman Advisory Group. Joe, welcome back. Good to have you.
Hey, thanks, Ted, and appreciate that glowing introduction. I will say my bachelor's degree, it's kind of funny. My senior thesis project was a semi-autonomous beer launching fridge. So I put all your tax dollars well to work. Thank you all so much.
All right. Okay, let's, one thing we always do before we kind of launch into the main event here and before I turn things over to Joe, we do want to make sure that if there's anyone on the line who doesn't know who SnapTech is, we just want to spend 1 minute sharing a little bit about that. So SnapTech IT, we are a security first managed service provider with operations in Atlanta, Georgia, Phoenix, Arizona, and San Francisco, California. We serve clients locally and nationwide. Our point of view is that every new client we come across is frustrated in some way with how technology is working out in their organizations or with their people. And our fervent belief is that technology should be solving problems for your staff, making you more productive, and it shouldn't be creating problems for you. So that's our real singular focus in how we deliver managed services. We really engage with clients in 2 different ways. For small and medium business organizations that don't have an IT manager or don't have an IT department, we provide managed IT services. So we basically do everything. We also serve larger organizations, say companies that have anywhere between say 75 and 500 employees. In those sorts of cases, there's often an IT manager or an IT department. And in those cases, we partner with those sorts of organizations and we call that co-managed IT. So with that, let me turn things over to Joe and he will take it from here. And I strongly encourage you to ask questions as we go along.
All right, folks. Let's talk about insurance. Now, if there's maybe one thing I want everybody to get away from this presentation, it's that cyber insurance is a tool. It is not a toolbox. All right, so there are plenty of limitations to cyber insurance. And I say this as like the cyber insurance guy. I've written 2 500-page books on this. So I know a whole lot about this topic, but there's a little more to cyber insurance than you're probably aware of. All right. Now, first thing we're going to be covering here. Let me make my little screen smaller. All right. What is cyber insurance, right? It's important that we start just foundationally to say, what is cyber insurance? 2 sides, 4 buckets, and exclusions, fundamentally. All right, so we're going to go through that. Now, why is that important? Well, 1, we all want to be singing off the same sheet of music. And 2, while it would be nice to say that there is like very specific credentials that would allow an insurance guy to sell cyber insurance, that is not true. So the whole genesis of my books were really that I just wanted to figure this thing out, and then it kind of turned into a giant undertaking. All right, so simply by knowing what cyber insurance is, that's going to arm you to ask the appropriate questions to get the right coverage for your business. All right. Also, we're going to be delving into the exclusions, and that's really important because often these things are found, all the way at the bottom of a cyber policy. Put in chat there if you have read your cyber policy cover to cover. I'm always interested in that one. I think the numbers are generally pretty slim. We can't all be cyber insurance aficionados, but the cyber insurance market's changing. There's a lot of exclusions coming out. There are a lot of things that you should be aware of that, spoiler alert, your insurance guy may not know because he just hasn't been around long enough. And that can materially impact your business or potentially bankrupt your business if you're not aware of these facts. All right. Next, what type of controls do cyber insurance companies want? And what are they looking for in the near future? We'll be going through that. Next, where is the cyber market fundamentally headed? So that's going to have a material impact on how much you're willing to spend on this versus how much you're willing to invest in your cybersecurity controls. And then finally, kind of the boogeyman in the room, and that has to do with AI tools. And how is that going to impact your business? What types of cyber risks are we going to be seeing from that? And spoiler alert here, once again, the insurance industry has three main risks that they're looking at for the foreseeable future. All right, one is cybercrime, so it's like social engineering, losing money. Two is cyber war. Three is artificial intelligence. All right, so we're going to be hitting on those today. All right, now let's talk about who are really kind of the stakeholders here, right? When we go into who are all the parties that are involved once you get cyber insurance, or you're trying to get that. Now I put policy holders plural here, and then I put in CEO, CISO, risk manager, general counsel, etc. Why do I say kind of all these people? Well, it's very common that a business will go, hey, CFO, get a cyber policy. Now, fundamentally, what is that CFO probably worried about? Their own job, right? As well as the company as a whole, but they have their own perspective on what they view as a risk. So typically for a CFO, they're going to say, hey, I'm really worried about cybercrime, social engineering, invoice manipulation, that type of issue, because that's their world. Whereas the CEO, he might be more concerned about reputational harm, right? Whereas you start going through all the different players here, everybody's going to kind of have their own particular unique risks, right? Kind of that, oh no moment, I'm definitely getting fired if this is not insurable. So I would urge everybody out there, make sure you're getting your whole entity involved when it comes to cyber insurance, because it's going to touch everything. So you don't want to be the one person that is kind of the linchpin, and then you get blamed because you weren't thinking about some other risk that's not even within your department. All right, next, the broker slash agent. Now, obviously, I am an insurance broker, so I say this with love in my heart. Yes, we represent you. All right, but fundamentally, you have to understand there's just not a lot of knowledge in this area. Also, the general rule, absent special circumstances, which almost never exist, the insurance guy has no requirement to read, understand, or advise on what he's selling you. All right, so it's a heavy lift for the business. You guys need to know what you're looking for, why you're looking for it, and what those exclusions are that you should be worried about that you can ask for. All right, the insurance company, obviously, they're going to be offering terms of the policy. Unless you're a really large organization, they pretty much just unilaterally dictate what's going to be in that policy or not. Now, if you have, say, a 5-6 figure premium, you can kind of start playing the game and trying to get exclusions removed and a mandatory language and all that type of stuff. But frankly, most businesses aren't super well equipped to pull that off. Ergo, it's, hey, get a bunch of different quotes, analyze them, compare them, see what's the best fit for all the various stakeholders within the business. And then next, you're going to have the incident response panel. So these guys are pre-approved at vendor rates from the insurance company. And I put split loyalties in there because, you know, legally it's like, okay, they're supposed to be working in your best interest as a policy holder, but pragmatically, obviously they have split loyalties because they can't just be running up giant bills with the insurance company, or they're not going to be with those guys very much longer. All right. So once again, yes, there are panel vendors, so attorneys, forensics, etc. However, you need to understand they're also under pressure. So what does that mean for your business? It's really useful to have, say, like your MSP, in-house IT guys, right, to be double checking what's coming out specifically with forensics, because it is very common where we will see, hey, rudimentary forensics is done, they're getting in, they're getting out as fast as they can, but then the IT folks are saying, wait, hold on a minute, we need a little more clarity in this particular area of our network where we see a lot of danger. And that makes sense because the forensics guys just don't have that type of familiarity with what you have going on. All right, so those are going to be the major players moving forward. Ted, feel free to interrupt me if we got questions or something. All right. All right, so now let's talk about kind of some key things to consider, just to make sure everybody knows what we're talking about here. What's a sublimit? All right, if you look at your insurance policy, and this is really important, you will see big dollar figure at the top, right? That's your primary limit. And then for specialty items, you're going to start seeing sublimits. So it helps to have some type of risk assessment beforehand to know what your particular exposures are, so then you could start comparing that to sublimits. An example of a sublimit would be social engineering sublimit. So you get tricked, let's say your CFO gets tricked into wiring bad money to a bad guy, right? What's the sublimit on that? It's probably not going to be the big dollar figure you're going to see on the top. It's going to be buried further down. In that arena, 250 grand, maybe 100 grand, etc. Right? So that will have a material impact once you know what a sublimit is, you know what to look for. That will tell you, hey, are there some additional internal controls or cybersecurity controls that we can implement to mitigate that type of loss, right? So if you only have 100 grand and you're regularly sending out 6 figures on a weekly basis, you're going to want a little bit of extra defense there. Right, next, what's an exclusion? An exclusion is things they are not going to cover, right, in whole or in part. Next, what's coinsurance? We're seeing this more and more. Coinsurance means, hey, and often, once again, this is buried deep in the policy, but what it says is more and more common for ransomware, I will add. They will say, hey, yes, you have your deductible. However, you are also going to pay some overall percentage of that ransomware event. Now, why is it important that you know that this thing exists? Well, if you think that you have a $5,000 or $10,000 deductible, but then buried in your policy that the insurance guy probably never read, it's like, oh, hey, by the way, you also have an extra 20% coinsurance requirement. Well, now your risk exposure in terms of a dollar figure just went exponential. All right. So obviously then it's, you don't know how much a ransomware event's going to cost. You probably don't want to put 20% of that on top of your deductible. Ergo, go back to your IT folks and say, all right, what additional controls can we implement to mitigate that risk, right? It makes a lot more, how would you put it? Business sense once you start just doing plain numbers like that. Okay, now, what is cyber insurance? Really simple. 2 sides, 4 buckets, exclusions. So I often joke around with people that, if I love cars. I grew up working on cars. That's why I got a degree in engineering. But with that, if we stood by the side of the freeway and I said, hey, Ted, what type of car is that? And you're like, I don't know, it's a car. And I'm like, oh, it's a, mid-size SUV crossover or something, right? I'm like, hey, what's that? That's a truck. No, that's a mid-size dual cab short bed Tacoma. It's like, okay, great. But at the end of the day, what do they all fundamentally have, right? Minus those weird like trike things that people have that I've seen around here recently. But fundamentally, it's, hey, you got a steering wheel, seats, gas pedal, an engine, et cetera, et cetera. All right. So once you kind of know the overall framework of what we're looking at here, it makes everything a lot simpler moving forward. Now, the first side of cyber insurance is what I call first party coverage. So that's you. And that's money that your business has to pay, needs to pay, wants to pay following some type of cyber event. So that's generally what people think of as cyber insurance, but there's actually more to the story. The other side, third party claims. Now, what's that? Your clients, vendors, regulators. It's somebody that wants money from your business after a cyber event. Now, if you go back to what was it? Mid 2019. You can actually find one of my articles. I think this one it was published in a nationwide journal. And I went through and I said, hey, what's up with these third-party cyber claims, right? Like class action claims following cyber events. And thank God I went to law school. So I just got to go through every single class action claim brought after a cyber event. And my synopsis then was it's not really a big deal, right? At that point, unless you were at least $1 billion organization and you lost at least 200,000 records, you probably weren't going to get sued. So at that point in time, I said, not that big of a deal. That has changed. That has fundamentally changed. What we're now seeing is what I call the investigatory death spiral. And you can see this all over. So what we're seeing now is, hey, what does every attorney general in every state want to do? They all want to run for Congress. What's the easiest hat to hang up if you're trying to run for Congress? Consumer protections, and the sexy one is cyber. So what are we seeing now? Business gets hit, clients start leaving. Once clients leave, super easy to bring a claim or a class action claim. Depends on the jurisdiction, but it could be as few as like 11 people to create a class action claim. So imagine you're a car dealership, very transactional. People generally don't enjoy the experience. And you just happen to sell a car to a guy 4 years ago. Well, now, how easy is it for him to bring a class action claim? Or imagine how many of your clients are attorneys. I've already dealt with that where I had a CPA firm. They just happen to have had one attorney that he came in 1 year, didn't come back the next. His information happened to get stolen, right? They provided services 5 years prior to the cyber event. He launches a class action claim. Now, what does a class action claim do? That starts getting the attention of regulators and vice versa. So claimants, they will bring in information brought from the regulators, and regulators will use information brought from class action claims. And that stuff gets expensive very, very quickly. And it's incredibly stressful, and I don't want to see you guys deal with that. All right. So you got to start thinking as well. You don't want your name in the news dealing with a class action claim. That's really bad. And with the internet, it's very common now. I see a class action claim pop up in my legal software. What do? I immediately hop online, search their name. What's the number one thing on, let's say, Google that everybody uses? It's, hey, that's their business website. What's number two? Data breach, class action claim. You look super responsible or irresponsible, pardon me. And we can't even measure what that loss is, right? Like we don't know how many people would have been your clients that aren't your clients because they just happen to see your name in the news, on the news, or in a web search where it just pops up right underneath it. So that's bad. Obviously, do everything you reasonably can to try and avoid that. All right, now here's a basic breakdown of cyber insurance. This is all that first party stuff. Now, when you look at this particular view, your eyes may bleed. Sorry, Ted, do you have a question? Okay. So you don't have to memorize that chart. That's just a basic breakdown of like what I use internally. But fundamentally, you can take any cyber insurance quote that's out there and you can break it down. So instead of memorizing this list and trying to go through there, a much simpler way, right, is really you're just going to have 4 buckets of coverage. Now, I will say I'm phrasing it this way because it's just easier to digest. Now, obviously, what you think is a basic business email compromise, right? Bad guy got into one of your employees' email accounts. That can very quickly turn into a data breach. You could have bad guys get in. They could start sending malware to everybody on your contact list. But nonetheless, this is the easiest way to break it down. And then think to yourself later, okay, there may be interplay here between the different buckets. So first bucket is data breach. That's loss of PHI, health information, PCI, credit card, debit card information, and then PII, personally identifiable information. So as we were talking about before, obviously social security numbers falls under there, but also driver's license numbers. And every state has a different definition. So in terms of pre-breach sanity is maybe a good way to put it. What you should know is the breach notification law that generally applies following a breach, it doesn't matter where your business per se is located. It's where your clients are residents of. So you may be next to a, let's say, a military base. Well, you might have to deal with all 50 different state and territory breach notification laws, plus potentially some overseas exposure as well. So there's a lot of moving parts there. Once again, you don't want to have to play that game. Now, what's like a cyber event, business email compromise, DDoS attack, something to that effect. But generally, business email compromise is the most common one. Number two, ransomware, with a huge caveat to ransomware. Number three, loss of funds. Number four, what I call miscellaneous situationally important. So that could be kind of a standalone issue, or it's just one of these other issues is going on, one of the other buckets is triggered, and you kind of need this extra little special coverage to assist with a very specific purpose. All right, so let's talk about what are you looking for in a data breach / cyber event type coverage. So I will say, if you have a cyber quote or you already have a cyber policy, you could typically just do a Control F, a search function on that PDF, and you can go through your own cyber policy and you can see if you have these coverages or not. All right, kind of step one, attorney. Why do you need an attorney? This stuff is hyper complex. It's changing very, very rapidly. You are not going to be able to do this yourself. They kind of act as like the central point, the nexus of everything moving forward. Then, of course, forensics determine scope and nature of the breach. They work hand in hand with the attorney to figure out, all right, what are your legal obligations here? Hacker damage, notifications, credit monitoring, business interruption, and the potential for regulatory fines and penalties, which is going up, 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 and up, unfortunately. Now, let's talk about ransomware. All right. Obviously, the boogeyman in the room. Super, super terrifying. Quick public service announcement. Please get immutable backups. Please get immutable backups. If you do not have immutable backups, you're probably going to have a really bad day. All right. So, well, I'll just briefly define that. Sorry, Ted. All right. Yes, you need backups in case something goes wrong. But guess what? For over a decade, the bad guys have been encrypting backups first, right? Now, there's obviously some security you can put on those backups, but I would say nonetheless, nothing's perfect. So what's an immutable backup? Kind of the easy answer. Don't kill me for this one, Ted. They can give you a better answer. But imagine a box, and every 30 days or whatever that periodicity is, you throw stuff into that box and you just pull the cord out. Nothing goes in, nothing goes out for, say, a month, right? Or 60 days or 2 weeks or however you want to set that up. That would be hyper, hyper useful. I'm gonna bring that back up here again when we start talking about exclusions, and you'll see precisely why, if you don't have immutable backups, that could literally be the end of your business, and there is nothing you're gonna do about it. Sorry, do you have a question, Ted? Oh, sorry, I thought you had a question. Okay. All right, so what are we looking for with ransomware? Attorney, forensics, same reasons. Ransom payment, caveat we'll talk about later, with a negotiator. Hacker damage, business interruption, notifications, credit monitoring, regulatory fines and penalties. Why did I put that in there, right? Notifications and credit monitoring. Well, about 70%, if you believe Codeware, of ransomware events also include a theft of your data. All right. Now, once again, let's imagine everything plays out just fine. Well, you have to remember these bad guys are really smart, highly unethical, but very intelligent. So what have we already seen? They go in, first thing they're going to do when they get into your network, search for your cyber insurance policy. So now they know exactly how much you're working with. So what does that mean to your business? Business interruption, reimbursement, all these, kind of additional or ancillary costs that go with a cyber event. Well, now you may end up paying that out of pocket because the bad guy goes, well, no, I know exactly how much money you have on your policy here to pay us. All right. So you don't want to end up in that situation. Once again, cyber insurance is a tool, it is not the toolbox. So, as I often joke around with my own clients, a successful year is when I call you once and I take your money. Because if we're speaking twice, you're having a really bad day, you're about to have a terrible week and an awful month, and your year might get really stressful if we start tacking in regulatory inquiries, class action claims, et cetera, et cetera. So please secure your system. It's going to make everything easier. All right, next, loss of funds. Now, this is where it kind of goes off the rails as far as cyber insurance is concerned, because you have to read the exact definition of what they're covering. So, like if you came to me and you said, hey, Joe, I need coverage for a social engineering loss, I would say, awesome. What does that mean to you? Because these are not standardized terms. They're not codified in statute anywhere. It's just whatever the policy says that they actually mean. So that's things like social engineering, telecom fraud, wire transfer fraud, invoice manipulation, reverse invoice manipulation, all those types of issues. That's in the loss of funds category. Now, once again, if you go back, say 5 years, I could easily get you $1 million. But what has happened? The insurance industry has lost a phenomenal amount of money. Ergo, they really started lowering the sublimits here to say, hey, we're not going to keep insuring these huge losses. So that's where, talk to your IT folks, you have to start worrying about what's your overall exposure here. And I've dealt with plenty of cases in the past where the bad guy was in there for a couple weeks, just siphoning off here or there and so on. And it really grows into a phenomenal amount of money. All right. So they got wise and they said, all right, if we ask for like, a $10 million transfer, that obviously brings a lot more attention to why are we sending $10 million, even large companies. But a bunch of smaller wire transfers that add up over time, that gets a lot less attention. So obviously there are human controls and there are cybersecurity controls you can implement to try and mitigate that type of loss. All right, now getting into the miscellaneous situationally important type coverages, things like reputational damage. So that's clients leave after a cyber event, right? You have a delta in revenue there, generally about 180 days, where the cyber insurance company will reimburse you for those losses there. Gives you some time to go back out, pound the pavement, get additional clients, build that business back up. Business interruption, dependent business interruption. So let's say, and you also have dependent system failure. So let's say you're reliant on some third party for your business to operate or make money, and those folks go down. Well, in that case, your policy may reimburse you for some of those losses. Now, once again, these are typically small sublimits, so only about 100K, so it's not going to solve all problems, but you will have something there. Right, you see voluntary shutdown, bricking coverage, kidnap expense, etc. Any questions yet, Ted? All right. Sorry, I had to drink some water. My throat's killing me. All right, now, where is the cyber insurance market headed? Well, I think I kind of already prefaced this, but they've lost a lot of money. All right. And they're trying to narrow down these policies to be a little more realistic on what they'll cover and what they won't cover. So, what are they asking for? Hey, we need more security for you to get your quote and for you to get your policy. It's either this year or it's moving forward. They're going to be asking for additional security controls. Next, higher cost. All right, so that's just going to be baked into it, unfortunately. Obviously, the worse your cybersecurity is, the higher those costs are going to be. Higher deductibles or retentions. So they're trying to say, hey, we're trying to push more monetary risk back on you as the policyholder. We think you need to have more responsibility than we do. So back in the day, you would have these like zero deductible policies. Obviously, that's a moral hazard, as we'd call it in the insurance industry. Those programs imploded because people just, they had no skin in the game. Lower sublimits, lower limits per insurer. So what does this mean? If you're a larger organization and you're like, hey, we need 5, 10, 15, 20 million dollars worth of cyber insurance, well, that's going to be a problem because you should have your controls in place, because what's going to happen is, hey, maybe this year you got 5 million. Next year, that insurance company is going to go, hey, the most we're going to put out on this is 3 million. So now you have to go to the excess market. They're going to want to see all those additional controls. So the name of the game there is, hey, make sure you have your cybersecurity in order. And we'll talk a little bit more about that in a second. And then those co-insurance requirements, they're always hidden inside of policies, which drives me nuts. But somebody out there, one of you, I would bet, has that co-insurance requirement on their cyber policy and they don't even know it. So your monetary risk and exposure there is way higher than you anticipated. So that should immediately say, all right, what do we need to do to mitigate that risk so we can focus on our business and do what we got to do? And then kind of the coup de grace, more exclusions. All right. Now, what are those exclusions that you need to know about? I'll preface this by saying, you know, everybody's terrified of the cyber insurance application, right? And answering it wrong, and, you know, court case pops up, they decline coverage. That's generally pretty rare. There's a bunch of legal rationale behind why that is. So the insurance industry is moving towards exclusions because it's a lot easier to deny coverage there. It's very black and white. And I will say generously, they're kind of preying off ignorance because nobody reads their policies. So somebody out there already has these exclusions in their policy. They just don't know it because they've never read it. Their insurance guy may have never read it, and so on. All right, number one, legacy hardware software. What does that mean? Hey, if you have something out there and it's not getting updated anymore, there's no more security patches to it, the insurance industry is saying, hey, we can't insure something that no longer has active support that's being updated when new flaws come out, right? We can't insure this like Swiss cheese network there where they have some big exposure. Now, let's say you're a manufacturer and you have some $10 million widget maker, right? That was like a one-off production. Well, you're probably not going to buy another $10 million newer widget maker that does the same thing just to get cyber insurance. Now, obviously, if you're going to do that, cool, buy your widget. Otherwise, I would say you got to talk to somebody like Ted and his team, because once you know that these exclusions exist, you can go, okay, well, maybe we need to add an air gap to that system, right? Like remove it from the network. Maybe it's still running on Windows 95, right? Is the underlying system there. So like we just, there are no updates, haven't been for quite some time. So like we need to talk to the IT folks to say, okay, we have this exclusion. How do you think is the best way to deal with that to minimize our risk of this going sideways? 0-day exclusions. All right, if you see this, run for the hills is my professional advice there. Why do I say run for the hills? Well, what is a 0-day, right? A 0-day is a vulnerability that nobody knows exists until they see it in the wild and they start, you know, exploiting systems. So insurance companies are going, hey, we don't know the probability of a 0-day. We don't know what that could cost us. So, hey, let's see if we can try and sneak this in and just exclude coverage for 0 days, because there's very little defense against something like a 0-day. Now, obviously, that should be the reason, or one of the primary reasons, you would even buy cyber insurance to begin with, right? Is a 0-day. It's like, hey, we did everything we could to secure our system. There was just no defense for this one thing. We want insurance for that. So you could really get kneecapped there if you have this 0-day exclusion. Next, CVE exclusions. I like to relabel this, thou shalt have an MSP exclusion. So if you guys are with SnapTech and let's say you're doing your quarterly business review and they're talking to you about patch management and it's just kind of, flowing over your head, your eyes glazed over. No, it's really important. So what is a CVE? A CVE is a critical vulnerability. And ultimately, what are they getting at here? They're saying, hey, you guys will see it all the time in the news. Hey, big new exploit, big new vulnerability found in XYZ software. What these cyber insurance companies are saying now is, hey, these exploits come out there, right? These vulnerabilities are known, it's published. You got to keep track of it, but you only have so much time to patch your systems, right? And if you're not being responsible in patching your systems, we just can't insure you for that. So it makes a whole lot of sense that either A, internally in your business, you have patch management software and you're keeping track of it and the CEO is getting updated on, hey, how all this is going down. Most businesses probably can't do that. And so I say that's why it's the thou shalt have an MSP exclusion, because that's one of the primary functions of an MSP, right? Is to say, all right, this new vulnerability came out, we're keeping track of all this stuff, this is our patch schedule, right? And then you push it in from there. So please make sure you're keeping on top of that. If you have and I saw this more in the past, but your nephew who's really good with computers is running your computer system, I highly doubt he's keeping up with these critical vulnerabilities. And so you gotta keep attached to that because that could really burn your business. What they're saying here is, hey, if something bad comes through that critical vulnerability, you have no insurance for that loss. It is honestly that serious. So keep on top of it. All right, OFAC exclusion. You remember before I was talking about ransomware, and I was talking about ransomware payments. Well, there's actually an exclusion in all of these cyber policies. Now, things like legacy hardware, software, 0 days, CVE exclusions, that's insurer dependent, but it's going to become very, very commonplace, if not standard, really in the next 3 to 5 years, if you don't already even have it on your cyber policy. A lot of major insurers have already put that on there. But an OFAC exclusion, it's not really explicitly stated in the policy, except for kind of this boilerplate type form that gets added. And what are they saying there? U.S. Department of Treasury, Office of Foreign Asset Control. And they say, hey, you can't give money to people that we think, in kind of layman's terms, are terrorists. And that makes sense. Well, guess what a lot of bad guys and a lot of bad countries do? They use ransomware to generate funds for their regime. Ergo, if you get to the attorney, right, they bring in the forensics, and the forensics people go, we think wherever this payment's supposed to be going to, that is somebody on the OFAC sanctions list. I've even seen where just a news report, how would the journalist have any insight into this? They won't, but a simple news report that said, hey, we think that this came from somebody from an entity that was on that OFAC sanctions list, your cyber insurer will just cease everything. There will be no payments made. So if your system's locked down, good luck. I hope you talk to Ted and the team about immutable backups because you're going to need something. Now, traditionally, I will just say OFAC is wholly unequipped to deal with cyber issues, right? Traditionally, they've dealt with, if you need a waiver, which by the way, they say there's a presumption of denial in their release. So you're probably not going to get a waiver. But they're used to hey, this guy's sanctioned. He has an attorney in a U.S. court representing him, right, to the federal government. And so that attorney wants to get paid. Even that takes 6 to 9 months for that process to clear through. So imagine a very technical cyber event issue. They may never get back to you, in which case you could be sitting there going, everything's locked down. We have no files. Who knows if this stuff got stolen? It's now going to be on the dark web. And there's no mechanism for you to either recover and keep your business going, or B, Hopefully you don't have to do this, but pay the bad guy to try and get the key to recover those files. So you're just you're looking at a potential like extinction level event, frankly, for your business if you get hit with something like that.
Well, I guess, I mean, just to jump in on the OFAC exclusion topic, I mean, just to kind of unpack it a little bit more, I mean, the
Mhm.
problem you would face is you've got, you know, if you have a bad actor who is insisting have encrypted all of your devices and all of your data, and they're requesting a ransom, it is a violation of law to pay a ransom if the bad actors happen to be on this treasury list of terrorist organizations or rogue states. Like
Mhm.
it's unlawful by federal law to actually pay the bad guys, and therefore, you know, your insurance carrier would not pay the ransom or engage further. So it just underscores, I mean, a consistent theme that we've heard today is that, you know, cyber liability insurance is one tool in your toolbox to manage risk, but it's not an all-in bet on round one thing, because the world is so complex and there's all these other issues.
Mhm.
One of which is this OFAC exclusion, which a lot of hackers and bad actors are, you know, members of terrorist organizations or rogue states, and so you wouldn't have coverage and you would have no resolution in that sort of situation. Therefore, this is why you need those immutable backups. Therefore, that's why you need to think about risk management in a broader sense, so that you have other tools in your
Mhm.
toolbox to recover from a potential cyber incident.
Oh, absolutely. Absolutely. So I always tell people, hey, security comes first, right? Think of cyber insurance as like a reserve parachute. It's you wouldn't go skydiving, obviously, with just one parachute. That's probably not a good idea. And you don't want to have to rely on your reserve parachute because that means you already got tangled on the way down and you're probably freaking out. So
Hey, Joe,
once again,
there's a follow-up
mhm.
question that just came in from Doug, and he says, on the OFAC exclusion, wouldn't the policy still cover recovery assistance? But if it, you know, disallowed paying of the ransom, would you still have other elements of coverage from the carrier?
Yeah, you could, but then ultimately the question is, I mean, what are you going to recover, right?
Right.
If
If
everything you have is, yeah, I mean, there may be some business out there that could just start from scratch with literally nothing and go from there. But I mean, at the very least, just the business interruption alone, when you have to just start from ground zero for your business, I mean, that would be incredibly disruptive.
Yeah, so
Um,
it's, but it's, I think it's, the point is, like, the OFAC exclusion prevents the payment of the ransom, but it doesn't void, you know, other damage, you know, coverage of other damages you
Mhm.
might have. But it's important to think about this reality with a ransomware attack, that if you don't have immutable backups, if you don't have other means, um, and the threat actor happens to be one of these rogue states, it could be a terrible situation. So
yeah, and then whatever the crown jewels of your business are. So let's imagine it's your entire client list, every invoice that they've ever paid, exactly what they're buying, and then that just ends up on the internet for all of your competition to look at. I mean, there's plenty of people out there that have no morals that will use that information to completely decimate your business, even if you get back up and operating, right? So, the bad guys, if they don't get paid, they start putting the screws to you, and then you end up in this position where you literally just cannot pay them. So, yeah, even if you got your computer system back up and operating, you're gonna have to build everything from scratch, which would be hugely disruptive and time consuming at the end of the day. Next, we're seeing. Sorry, any other questions on that, Ted?
well, I do have a question. Maybe before we transition off this slide, I have a question that might bring together a couple different topics. So why don't
Sure.
you finish here and then hit me back?
All right. Widespread event exclusions. So this is the insurance industry going, hey, what do we do if there's this like worldwide event or nationwide event or regional event that just shuts everything down that results in a cyber event? So cyber insurers are saying, hey, we can't bankrupt our entire insurance company with cyber insurance for something that we can't really forecast or charge appropriately for because it's just so random. Well, in that case, widespread event exclusions. So these most commonly, what they're saying is every insurer is different, but it's like, hey, if you meet like this threshold as dictated by the cyber insurer, well, your limit was, let's say, 1 million, maybe now it's only 500,000. And then on top of that, they can also change what your deductible is. So it all just kind of points back to you don't know what the risk of that's going to be. So the easy answer is, hey, do everything you can to secure your system, right? So that way it's just ideally one less thing you have to worry about, or it's something that you have to worry about less. All right, I think cyber war is my last one, and then we'll plug your question, Ted. So cyber war exclusions, these are brand new. I just made a video on this. What do you care about in cyber exclusions? Well, obviously, you go back to 2017, there was this big cyber war thing called NotPetya. It resulted in billions and billions of dollars in insurance claims. And the insurance industry ultimately lost those legal fights. So they said, all right, we got to find a way to limit our exposure here. Now, if you go back to the beginning of this presentation, what did I say? What are the three major risks? AI, social engineering, cybercrime, and cyber war. So what they're saying is the big ticket kind of takeaway here is you could have full exclusion or partial exclusion, and it could be based upon if it's the threat comes from a different country or from someone under the control of that foreign government. All right. Now that's a big problem because if you go back to, let's see, it's March, last month today, actually, in the pharmacy world, you had this big Change Healthcare Optum issue. And man, just took them down. There was like a $22 million ransom. It's a crazy story, but they put in their filing, hey, we think this came from a nation state supported actor called Black Cat, which is pretty famous in the ransomware world. Now, with this new exclusion, it's very possible that their cyber insurer could have denied coverage based on that exclusion, right? To say, hey, we think Black Cat is controlled or directed by the Russian government, ergo, we are not going to pay this. And now you got a big, big problem. And that is, as far as it seems within the exclusions, a full exclusion, right? So it's not just ransom payments, it's we will not pay for anything involved with that type of cyber event. Now, this is coming out of Lloyd's of London. Probably most of your clients are US based. Why do they care? A lot of the major cyber insurers are actually Lloyd's of London syndicates. So things like Hiscox, Beasley, etc. Those are Lloyd's syndicates, if my memory serves me correctly. So, hey, you got to think, what are the odds you get caught up in a cyber war, right? Like, we don't know. I mean, the NotPetya issue, that was supposed to be between, I believe it was Russia and Ukraine at the time, dealing with the Crimea. But it's spilled over to the rest of the world, all over. So you really got to be careful. You need to start reading those cyber war exclusions to see how that's going to impact your business. If you haven't already had your policy renew and you're a Lloyd's syndicate, it is absolutely coming on your next renewal. So if you're a bigger company, and now we're looking at towers of insurance, so you have a primary policy and then excess policies on top of that, that could really be a problem. There's a bunch of language in those exclusions that frankly is just going to have to get litigated to figure out what do these terms actually mean in practice. Some of them are more terms of art than science, so it's going to be very situationally dependent. I'm being somewhat intentionally vague here because like I have a 25-minute video where I actually go through this stuff. Each one is different, but there's 8 different types. And so I would say, hey, make sure you know what type of cyber war exclusion you have on your policy or in your tower of insurance, because that could bring a lot more financial risk to your business than you thought. All right, so Ted, what was your question? Sorry.
Okay, so I'm just going to read this because it brings together several topics you addressed earlier in the talk. But this is
Hmm.
from Chris, and he says we have a ransomware encounter coinsurance percentage of 25% and a sublimit of $500,000 and a retention of $10,000. Can you touch on sublimits and coinsurance a little more and what that exactly means?
Okay. So caveat, I would have to see the exact policy language to see the interplay between those different terms because it varies. But generally what they're going to say there, my guess is that he is with Hiscox Cyber Insurance Company. That's just my guess. Could be somebody else. But probably what they're saying there is, hey, you have, when a cyber event occurs, you have your own deductible, which I think he said was what, 10,000?
Yeah, a retention. It said retention. Is that
Okay.
another term? Is that another term
Uh,
for deduct?
kind of synonymous terms, kind of at
Okay.
this point.
All right.
So you're going to be responsible for that first 10K, right? Then there's 500,000 overlaying that, of which you will ultimately pay at least 20% of that.
25%. It said the
Oh,
code.
sorry, 20. Oh, that sucks. 25%.
Yeah.
So yeah, that's a lot of money. Now let's imagine you blow through that 500K, which is not unheard of in a ransomware event. Well, now you're paying all of it. Everything over
Above
the
it. So
500K minus what you already paid for your retention plus, or minus also what you already paid for the co-insurance requirements. So there's a lot of potential financial exposure there for your business. So one, I would say, all right, pragmatically, how soon can you get away from that cyber insurer? If you can, I would say try to get away from it. Two, in the interim and in the long term, increase your controls. Please increase your controls because if you just start adding up dollars with that exact example, that's a lot of potential money that's going to get shelled out for a ransomware event. So that's why I always tell people security comes first, insurance comes second. And on that topic, talking about increasing your security, right? What do insurers want? Well, so every insurance company wants something different, but the easy answer is don't rely on insurance companies to tell you what to do. Now, let's say the easy way, conduct a risk assessment. Ted, I think, yeah, you guys do that, right? Just basic risk assessments for
we
clients?
do.
All right,
Yeah.
hey, what are your risks? Where are you at? Where do you need to be? If you can, map to a framework, just makes life easier. Two, I'm constantly talking to business owners where, I'm a former IT guy, so I know the lingo. They don't. So my easiest recommendation for them is, hey, you trust your MSP? Great. Go to them, ask for a wish list. All right, what's the biggest bang for the buck? And then have them explain to you, all right, how does this fit in? Right? Why are you saying this is the biggest bang for the buck that I'm going to spend? Like anything, like you go to your attorney, right? And you say, hey, I got this problem. Help me solve this problem. The same thing should be occurring with your MSP, where you go, okay, I know I need better security. I understand all these exclusions are already here, like the co-insurance ransomware requirement, or they're coming down the pike very shortly. Ergo, what's the biggest bang for the buck, right? And then your MSP can, right, go full nerd, like IT guys like to do. Then we can start talking about acronyms, but then explain the business case in the plain language, explanation of what those controls actually do to make you safer. And then work with your MSP, have a plan of implementation. Why? Well, one of the benefits to being the dumb insurance guy in the room is that I get to ask stupid questions and people are like, oh, you're the insurance guy. So I was at a conference once and I was asking this attorney who litigates cases against companies after cyber events, right? He's the class action claim plaintiff's lawyer guy. I said, hey, what's the one thing that tanks these cases, right? Where you see that piece of paper and you go, daddy's got a new boat. And he goes, it's so simple, right? And he's over there very braggadocious. And he goes, dude, every time there's an email from somebody in the IT department to somebody that's an executive, and they're saying, hey, we got this big problem, right? We got a big exposure here. Here's what I think we need to do to fix it. And then the executives go, okay, great. Yeah, we're going to send that money to like marketing or somewhere else. Right. Now that's exhibit A of dealing with some type of legal exposure where you go, oh, so executives, you knew there was a problem. These people were telling you what the solution was, but you acted negligently. You just didn't care that much about your customers' information, so you went this other direction, right? Now, obviously, there's more to the story, and there's obviously defense there, but you don't want to be put in that position. So I asked him, I was like, okay, what could a business do that if you saw right after they got hit and you're trying to bring a lawsuit against them, what would you hate to see? And he goes, oh, simple. He goes, a plan of implementation. He goes, why? Because nobody's perfect. Everybody's going to get hit eventually. So if they were able to show to the judge or the jury, hey, we knew we had this problem, but we didn't have unlimited money. So what we did is we had a plan to try and get there, right? To put these safeguards in place to protect our customer information. We were being proactive. We just happened to get hit in the interim. He goes, that's really hard to defend against at the end of the day. He goes, I would hate to see something like that as a plaintiff's lawyer. So that's why I say, hey, everybody, talk to your MSP, get a plan of implementation, and stick to it. Now, real briefly, because I know I'm waxing poetic for slightly too long, but what's the hard way, right? This is what people inevitably do despite my best pleading, so please don't do this. Don't be that guy. What's the hard way? Post-breach, I'm going to show you breach notification letters, regulatory mandates, and legal actions. All right, and cyber insurance renewals. So here are just some examples. These are breach letters. This is you'll see this in every single breach notification letter. We have implemented specific steps to safeguard against future unauthorized access to our files, evaluating additional measures to enhance our protocols, blah, blah, blah. The next one. These are all publicly available, by the way. We have taken steps to help prevent a similar incident from the future, including blah, 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 implementing additional security safeguards, controls on our website, et cetera, et cetera. Different one. We were reviewing and enhancing existing policies and procedures to reduce the likelihood of a similar future event, right? So what is all this? It's, uh-oh, something happened. We don't want to get sued. We have to put our best foot forward and say we're doing this. Well, now it's a compressed timeline. You're way outside the plan of implementation. Now you got to reroute all this money and do kind of all these things in the hope that you're not going to be viewed as negligent to a judge or jury. So you don't want to do that. Likewise, here's all these regulations. I don't have time to go through all these. But the moral of the story there is way more that you might be legally required to do than you probably have any idea about. So the easy answer there is if you can get a data privacy attorney to tell you what you have to do legally, that's great. If not, they're kind of rare. There's only so many, data privacy guru guys out there. What's the moral of the story? Do everything you can to increase your security because like I had a firm in Virginia that got hit. They just happened to have 2 clients from Massachusetts. And then what happened? Cyber event, notification, attorney general from the state of Massachusetts bangs on their door asking for 18 different administrative, physical, and technical safeguards and proof thereof. And you don't want to be in that position. The easy answer is increase your security. Next, you're going to see on your renewal, if you haven't already seen it, here's an example. I just pulled these from my own files. EDR in place, covering at least 95% of endpoints, all domain controllers. Probably 0% chance you're going to do that without an MSP. Next, this is risky panels, MFA required. Here you'll see, are you using cloud services? This is that ransomware sublimit endorsement will be removed, replaced with a full limit co-insurance requirement, 75% insured, 25% uninsured, right? So it's like I said, yes, they're asking for additional controls. You don't want to find out 2 weeks before renewal that suddenly you got to implement all this additional stuff. It's going to be expensive, it's going to be time consuming, and nobody's going to enjoy doing that. So what's the easy answer? Just increase your security beforehand, right? Work with your MSP. All right, last point, Ted, I swear, and I'm done. AI, it's a big problem, and we can only begin to speculate on how big of a problem it's going to be. but it gives a lot more power to people that are low-level threat actors. So that's a huge problem there. We're going to be looking at increased volume and impact of cyber events for all types of reasons, where they can just start automating attacks, they can start automating filtering of data, etc. Imagine just automating some crawler that goes through your network and finds your cyber policy, right? That'll increase your financial exposure right there. Automated reconnaissance for social engineering. So, hey, you get a voicemail, it just happens to be AI generated. It's actually the voice or the digital voice of your CEO, who also happens to be on, say, a fishing trip because they found out on social media, and they go, "Hey, sorry, reception's bad. Need you to wire, $10,000 to this guy, XYZ." Then you're out. Faster exfiltration, sorting of data. All this means it's going to be more expensive to defend your system. All right, Ted. With that, I am done talking. Absent any additional questions.
All right. Well, if you could go to the next slide, that would be super. Okay. Well, we're a little bit over, everybody. We covered a lot of ground, but what I think you heard today from Joseph Brunsman is, core education on some of the really most important, highly detailed elements of your cyber liability insurance policy and the process of getting coverage, being vetted for coverage, and then being underwritten, and then going through that process when and if, heaven forbid, you actually have a cyber incident and you need to call on your policy, hopefully you've thought about all those things like sublimits and co-insurance and exclusions, and you've been working with a broker that really helped you sort through and find the policy that meets your risk management requirements. But that's kind of the big takeaway on the cyber liability insurance front, and it's one toolbox, or it's one tool in your toolbox rather. And then the other point that Joe really pointed out throughout the entire presentation is, because it's just one tool in your toolbox, think about your cybersecurity posture as your first and most important line of defense in terms of managing these risks, and work with an MSP. So if you are not yet a client, a cyber risk assessment is a core part of what we do with every prospective client, because we want to understand the nitty-gritty details of exactly where you stand today so that we can properly advise you on where we would need to take your environment to put you in a good position to manage risk. And then if you're an existing client, we always are consistently revisiting our roadmap with you to look at those ideas that are on the plan of action or plan of implementation, so that we can get after those things where we're raising the bar consistently on the cyber posture of our clients. So that's a core part of what we do as a security first managed service provider. So we welcome any follow-up conversations with any clients or prospective clients around the cybersecurity topic. I want to thank Joe for a very informative discussion. Thanks for joining us again. Look him up on his website and check him out on his YouTube channel. He's got a ton of awesome content out there. Just go to YouTube and check out, just search for Joseph Brunsman and you'll find him. And then I want to invite everybody to next month's webinar, where we're going to be looking at, fortunately, the good side of artificial intelligence. And we're going to be looking at how you can be using ChatGPT from a very practical perspective in your business. And with that, I'll wrap it up. Thanks a lot for joining another SnapTech IT monthly webinar, and we'll see you guys all again on next month's session. Take care, everyone. Thanks, Joe.